Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Let's dig into metals right now because copper's trading at a record, continuing to climb after breaking above $13,000 a ton for the first time. Gold and silver coming off of their best annual returns in more than 40 years last year. For more on how to play the metals, let's welcome in Phil Streible, Blue Line Futures Chief Market Strategist, along with Bloomberg Intelligence Senior Commodity Strategist Mike McGlone. Guys, thanks for being here. Obviously, you throw Venezuela into the mix here of what's going on in the metals, but already we had obviously seen them perform. Mike, I want to go to you first. How are you thinking about Venezuela as it relates to copper, gold, silver, or is what's going on kind of ex-Venezuela?
I think it's adding fuel to existing rallies in the metals. It's the revenge of the metals. The Bloomberg Metals Index was up almost 60% last year. The key thing is I think it's in the later stages of the bull market. So dollar per price copper around $6 a pound, silver up at $80 an ounce at the moment are pretty extreme levels. So typically in bull markets, you have blow off tops. And I think we're more likely heading to that way because we're getting to that up too much risk. The key problem with silver and this velocity of the rally is you can bring on supply in silver from your underwear drawer. And it looks very similar to like it did in 1979. And that peaked around 50 in 1980, lasted until 2025. So that's the risks in the metal that people call the devil's metal for a reason. It's highly volatile. So I'm quite worried about it getting towards a narrow blow-off top.
I admit I've never heard it called the devil's metal. I like that. Phil, what about you? Do you think that there is a risk here that silver in particular has gotten a little overextended?
No, I don't think so. I mean, I think that it's indicating that there's broadening in the precious metals, and it shows the strength there. It gets the best of both worlds, the geopolitical hedge. It's got a supply-demand imbalance. It's silver's leadership in the metals reflects those rising industrial and investment demand, along with cyclical momentum. The U.S. tariffs, there are some speculation that of new U.S. tariffs on copper and silver imports. It caused traders to really rush those shipments to the U.S., and it created that scarcity of supply in London and also in China. So we believe that supply-demand imbalances, heightened geopolitical risk, long-term trends such as global green energy transition really support the outlook in the base case to hold these metals in your portfolio.
Well, and I want to zero in on copper in particular. I thought it was interesting, actually, the Bloomberg story talking about the copper record talked about ahead of expected tariffs that a lot of entities in the U.S. ordered a lot of copper, and so that there's a lot of supply locked up here. Mike, how long can that kind of a phenomenon last?
Well, that's the key thing about it. It's not a demand pull major factor from, say, China at the moment, which typically have been the major drivers of commodity bull markets for the last 10, 20 years. It's a supply constraint issue. It's being stimulated by artificial issues with tariffs, and also copper is a very autocorrelated commodity. The lessons of copper is you're supposed to buy it cheap, and it's very risky to buy it at these levels. So I agree overall, metals belong in a portfolio, but now we're at the levels that are getting so stretched and it's becoming in the mainstream, you have to be very careful piling on. So there's a very close connection between what's more and more industrial metals every day, silver and copper. The point is, when they get this high, typically elasticity kicks in. So I do appreciate all the fundamental things, but I switched over to a risk manager and just pointed out, yeah, you got to be careful with commodities like this, buying them getting too long after they go up.
Gotcha. Or if you're especially if you're just getting in now, I suppose. Phil, let's talk about gold for a moment. Are there implications of the action in Venezuela? Are we going to see an acceleration of central banks buying gold, sort of for what they perceive as safety reasons this year?
Yeah, that was one of the things that we were looking at, was how like Switzerland came in and they had seized some of Maduro's assets. And we were already seeing central banks continue to diversify away from the US dollar, other currencies, increasing those gold holdings, and that adds the structural support to prices. It all began with the Russia-Ukraine in 2022. The average central bank holds about 20%, where China only sits at about 8%. We believe the goal is for them to bring these up to about 30%. So this is a multi-year trend where these central banks are looking to hedge against those geopolitical risks and financial risks. You get the ETF flows, you get the portfolio diversification. So I just believe that this is going to be something where we continue to see the traditional 60-40 portfolio add strategic commodities such as gold, silver, copper, crude oil, and Bitcoin for diversification benefits to hedge against inflation and geopolitical risks.
Phil, even if people don't have them already, buying at these levels, or do you think maybe they wait for different entry points?
It's all about the allocation. It's all about not chasing. I mean, who knows? We've got a lot of economic data coming out at the end of the week. What happens if all of a sudden the unemployment rate takes a big tick lower? You're going to see the dollar index strengthen. You'll see 10-year treasury yields, 30 years, the short end of the curve will rise. This curve will steepen or will flatten out, and it'll pull the rug on the gold market. And that's where investors will have their next opportunity to get in.
We shall see, guys, and we'll circle back, I'm sure, and talk about metals as the year goes on. Phil, Mike, thanks so much.